Hi students, 12th Standard Accountancy, Chapter-5, Admission of Partner, Illustration sum number 27. Vino and Pearl are partners in a firm sharing profits and losses in the ratio of 2:1. Their balance sheet as on 31st March 2018 is as follows. Liability side and asset side items are given below. The risk is admitted on 1/4/2018 subject to the following condition. The new profit sharing ratio among Vino, Pearl and Derry is 5:3:2. Derry has to bring capital for 30,000 rupees. Stock to be depreciated by 20%. Anticipated claim on workman compensation fund is 1,000 rupees. Unrecorded investment of 11,000 rupees has to be brought into the books. The goodwill of the firm is valued at 30,000 rupees and Derry brought cash for his share of goodwill. The existing partners withdraw the entire amount brought by Derry towards goodwill. Prepare the necessary ledger account and balance sheet after admission. Listen here carefully. From the given information, first we need to pause the journal entry from the given information, from the adjustment and within the box from the question. After pause the journal entry, from the journal entry we need to prepare the ledger account. What are the accounts we are going to prepare into the ledger account? Revaluation account, capital account and cash account. Three accounts we need to prepare as a ledger account from the journal. Okay, then finally we are going to prepare the balance sheet, new balance sheet. Okay, so in this way first we need to pause the journal entry like 11th standard journal entry, ledger account, and finally we prepare the balance sheet. From the journal entry we need to only three accounts only posted into the ledger account. What are they? Revaluation account and capital account and cash at bank account. These three accounts only they are taken from journal entry to post into the ledger account. Okay, it will be easy for you. Okay, so as per that, first Derry is submitted on 1/4/2018 as subject to the following condition. The new profit sharing ratio among Vino, Pearl and Derry is 5:3:2. So they have given old profit sharing ratio that is 2:1 and new profit sharing ratio that is 5:3:1, which means 5/10 for Vino and 3/10 for Pearl and 2/10 goes to Derry. Okay. Profit sharing ratio. Derry has to bring capital of 30,000 rupees. Derry is a new partner. At the time of admission, Derry brought 30,000 rupees capital. So cash comes into the business in the name of capital. What is the journal entry? Bank account at 30,000 rupees to Derry's capital 30,000 rupees we entered. Okay. Then stock to be depreciated 20%. Depreciated means decreases. Okay, already we have stock value 10,000 rupees asset side in the question. Okay, from the 10,000 rupees 20% depreciated, so stock account decreases, asset value also decreases, so revaluation account is to be debited. So 10,000 from the 10,000 20% means what? 1010 cancel, 1010 cancel, 1000 into 2 are 2,000 rupees. Revaluation account at 2, stock account 2,000 rupees enter in journal account. Okay. Then anticipated claim on workman's compensation fund 1,000 rupees. Unrecorded investment 11,000 rupees has to be brought into the books. Listen, investment is an asset account. The old partners forget to investment amount 11,000 rupees into their ledger accounts book. Later it comes to their knowledge, then they recorded 11,000 rupees investment on asset side of their balance sheet. Okay, so their investment account after recorded asset account increases. If the asset account increases, revaluation account is to be credited. So which account is to be debited? Investment account is to be debited. Revaluation account is to be credited. 11,000 rupees entered. The goodwill of the firm is valued at 30,000 rupees. Okay. And Derry brought cash for his share of goodwill. Listen here. What is the goodwill amount? Total firm's goodwill value is 30,000 rupees. Okay. From that 30,000 rupees, there is share of goodwill? We need to calculate 30,000 rupees. What is Derry's profit sharing ratio? There is new profit sharing ratio is 2 by 10. Okay. So now we need to calculate there is goodwill from his 2 by 10 share of goodwill. Okay. So 3 2s are 6, 3 0 is to be added here, 6,000 rupees. There is a share of goodwill is 6,000 rupees, and there is brought cash for his share of goodwill. So there is a share of goodwill 6,000 rupees, and there is a new partner who brought 30,000 rupees capital, and his share of goodwill 6,000 rupees also there is brought at the time of admission. Okay, that the 6,000 rupees will goes to old partner's capital account. Why? Because old partner sacrifices their share of profit only. The new partner there will get share of new share 2 by 10 share of goodwill. Okay, so there is capital will goes to business expansion 30,000 rupees, and there is goodwill will goes only belongs to old partners capital account with their sacrificing ratio. So sacrificing ratio is not given in the question, it's not mentioned in the question. Listen here carefully, this is the new situation. They have given old share and new share. Old share value is 2:1. New profit sharing ratio is 5:3:2. So we can easily calculate to find out the sacrificing ratio. Okay, how can you find out? We have to subtract old share minus new share. You will get the sacrificing ratio. So the old share value is Venus old share is 2:1 means 2 by 3, and Pearl's old share is 1 by 3. Right? And Venus new share profit sharing ratio is 5 by 10, and Pearl new profit sharing ratio is 3 by 10. Now we need to subtract new share and old share. We will get sacrificing ratio. Okay. So first we check the denominator value. Denominator we have different value. There is no common number. 10 is not divisible by 3. 3 is not divisible by 10. So both there is no common number only. We need to multiply 3 into 10. You will get 30. So 30 is a common number. Okay. Then we need to cross multiply the numerator with the denominator. 2 10s are 20 minus 5 3s are 15. Okay. 20 minus 15, 5 by 30. Venus sacrificing ratio is 5 by 30. Similarly, we need to calculate Pearl's sacrificing ratio. 10 ones are 10. 3 3s are 9. 10 minus 9, 1 by 30. What is the share sacrificing ratio? 5 by 30 and 1 by 30. We need not consider the denominator value. So 5:1. The sacrificing ratio is 5:1. So the new partner there is a share of goodwill is amount is 6,000 rupees. It goes to old partner with their old partner's capital account with their sacrificing ratio, which means 5:1. So that 6,000 rupees goes to Venus capital. Venus sacrificing ratio is 5 by 6. 1,666. Okay, 3 zeros to be added here. 5,000 into 5 are 5,000 rupees. Similarly, Pearl has 1,000 into 1 are 1,000 rupees. Okay, so that sacrifice that share of goodwill, new partner there is a share of goodwill goes to old partner's capital account with their sacrificing ratio. So what is the journal entry? Bank account debtor 6,000 rupees to old partner's capital account. That means Mina's capital account 5,000 rupees, Pearl's capital account 1,000 rupees. Why here we write bank account debtor? Because the new partner Deri brought 6,000 rupees capital only. We are going to enter bank account debtor in the journal entry, and it immediately transfer to the old partner's capital account with their sacrificing ratio. So Mina's capital account 5,000 rupees and Pearl's capital account 1,000 rupees goes from there is share of goodwill. Okay. Then the existing partner withdraw the entire amount brought by there is towards goodwill. So there is a share of goodwill immediately transferred to the old partner's capital account with a sacrificing ratio. We pass the journal entry related to that question. Okay, then they have what information they given in the question, that 6,000 rupees share of goodwill. Immediately the old partners withdraw their share of goodwill from, there is there is there is towards goodwill. Okay, the old partners withdraw their share of goodwill from there is goodwill. Okay, so what we have to do, we are going to enter the opposite entry. What is that? Old partners capital account debtor to bank account. If they bring the share of goodwill, it immediately transfer to the old partners capital account, the sacrificing ratio. What is the journal entry? Bank account debtor to old partners capital account, and the old partners entirely withdraw their share of goodwill taken from there is. So what is the journal entry? Old partners capital account to bank account. Just reverse order, we are going to pass the journal entry. Withdraw means old partners capital account to bank account. Okay, we entered. Then come into the box from the question. General Reserve Workmen's Compensation Fund both or goes to old partners capital account with their old profit sharing ratio. What is the journal entry? General Reserve account debtor to old partners capital account and Workmen's Compensation account debtor to compensation fund account debtor to old partners capital account. This is the journal entry. So General Reserve amount is 30,000 rupees. So 30,000 rupees goes to old partners capital account with their old profit sharing ratio. So in this way, Meena's capital account 30,000 rupees, Pearl's capital account 10,000 rupees entered. Then Workman Compensation Fund 10,000 rupees is given in the question. Okay, listen the adjustment. Anticipated claim on Workman Compensation Fund is 1,000 rupees. So anticipated claim we have taken from the Workman Compensation Fund 10,000 rupees. So we have to subtract 1,000 from 10,000 rupees. You will get 9,000 rupees. That 9,000 rupees only we have to transfer to the old partners capital account with their old profit sharing ratio. So what is the journal entry? Workman's Compensation Fund account debtor 9,000 rupees to Meena's capital account 6,000 and Pearl's capital account 3,000 rupees. We calculated with their old profit sharing ratio accordingly. Okay, so we paused the journal entry. From this journal entry, we need to prepare revaluation account, capital account and cash at bank account as a ledger. Okay, 3 accounts we need to prepare from the journal entry into the ledger. First, we are going to prepare the revaluation account from the journal. What are the transactions related to revaluation account in the journal entry? We are going to enter into the revaluation account. Okay, so listen here. The second transaction we have the revaluation account. It is on debtor side. So you go to debtor side of the revaluation account and write the opposite account to staff account entered. Okay, the third transaction we have the revaluation account. It is on credit side. So you go to credit side of the revaluation account and write the opposite account, that is by investment account 9,000 rupees entered. So he entered the revaluation account related transaction from the journal entry. Now we are going to find out the balancing figure. So for that we need to calculate the total. So how can we find out the total? Which side we have the higher value, that side we calculate the total. In this way we have credit side we have the higher value. So that 9,000 rupees we entered as a total. After enter the total, below the total we have to draw double line. The same total 9,000 you are going to enter on debit side in the same horizontal line. After enter it, we draw double line below the total. Okay, now we are going to subtract, find out the difference between total and the lesser value. Okay, so for that 2,000 minus 9,000 from 2,000 you will get 11,000 rupees we have the total. Okay, total value is 11,000 rupees. So from the 11,000 you are going to subtract the lesser value 2,000, you will get 9,000 rupees. So this is the balancing figure. If you get the total on credit side, you will get the balancing figure on debit side. That balancing figure on debit side we called as profit on revaluation account. That profit on revaluation account, immediately we are going to transfer to the old partners capital account with their old profit sharing ratio. Who are the old partners? Veena and Pearl. Old profit sharing ratio is 2:1. So in this way, 9,000 into 2 by 3, 1 3 is 3, 3 3s are 9, 3 0 is to be added here, 2 3s are 6,000 rupees goes to Meena's capital account. And similarly 3,000 rupees, 3,000 into 1, 3,000 rupees goes to Pearl's capital account from the profit on revaluation account. So we prepared the revaluation account. We have the balance. We need to pass the journal entry for the balancing figure on revaluation account. Okay, where you get the balancing item, balancing value on debit side of the revaluation account. On debtor side of the revaluation account, you got the balancing figure. So you are going to write revaluation account debtor 9,000 rupees to old partners capital account, because that 9,000 rupees balancing figure immediately we transfer to the old partners capital account with their old profit sharing ratio. So revaluation account debtor 9,000 rupees to old partners capital account, 6,000 goes to Veena's capital, 3,000 goes to Pearl's capital account. We entered, we passed the balancing figure on revaluation account from revaluation ledger account to journal. Okay, now we are going to prepare the capital account from the journal entry. What are the capital account related transactions we have in the journal entry? We are going to enter into the capital account. Okay, we know very well about the format of the capital account. Okay, so we always started the capital account on credit side. The opening balance of the capital account shows on credit side. The opening balance of the capital account they given in the question. Veena's capital is 60,000 rupees, Pearl capital 40,000 rupees we entered. Against this, you are going to write by balance brought down. By balance brought down means what? Opening balance of the capital account. After we enter the old partner's capital account, immediately the next transaction you are going to enter new partner, there is capital account. Okay. So, where is the new partner? There is capital account is on journal entry. It is on credit side. There is capital account is on credit side. So you go to credit side of the capital account and enter 30,000 rupees on there is column. Against this you are going to write by bank account. Okay. Whenever the new partner bring the cash in the name of capital, whenever new partner brought the cash in the name of share of goodwill, it's called bank. It will be appear on credit side of the capital account. Okay, we entered. Then after we enter the first transaction, old partner's capital account. The second transaction is new partner's capital account. The third transaction is revaluation balance amount. Okay, so listen, where is capital account is appears here. Revaluation account debtor to old partner's capital account 9,000 rupees. Okay, so the old partner's capital accounts we see on credit side. So you go to credit side of the capital account and write by revaluation account. Okay. Against this you are going to enter 6,000 for Veena's column and 3,000 for Pearl's column. Okay. After entered, the new partner brought a share of goodwill, right? So where is the capital account? Here, the fifth transaction we have the new partner's share of goodwill. Bank account debtor 6,000 rupees to old partner's capital account. Where is capital account appears? It is on credit side. Old partner's capital account appears on credit side. So you go to credit side of the capital account and write the opposite account, that is bank account. By bank account, 5,000 goes to Veena's column, 1,000 goes to Pearl's column. We entered. Okay. So the sixth transaction also we have the capital account. It is on debtor side. Old partner's capital account to bank account. Okay. So old partner's capital account debtor. So you go to debtor side of the capital account and write the opposite account to bank account. Okay. To bank account and 5,000 enter into Veena's column. 1,000 rupees enter on Pearl's column. Okay, where is the capital account? We have the seventh transaction, we have the capital account. It is on credit side. Okay, so you go to credit side of the capital account and you enter the opposite account, that is by general reserve amount account. Okay, against this 20,000 rupees enter into Venus column, 10,000 rupees enter into Pearl's column. Then we have the last transaction in the journal entry, eighth transaction, we have the capital account. Old partner's capital account is on credit side. So you go to credit side of the capital account and enter the opposite account on credit side by workman's compensation fund. 6,000 goes to Venus column and 3,000 enter on Pearl's column. Okay, so capital related transactions we entered from journal entry into the ledger. Okay, so now we need to find out the closing balance. How can we find out the closing balance? So to find out the closing balance, we need to calculate the total. Which side we have the higher value, that side we consider as the total. In this way, credit side we have the higher value. So we are going to calculate on credit side as the total 60,000 plus 6,000 plus 5,000 plus 20,000 plus 6,000, you will get 97,000 rupees. 40,000 plus 3,000 plus 1,000 rupees plus 10,000 plus 3,000, you will get 57,000 rupees and 30,000 rupees entered. The same total value you are going to enter it on debit side in the same horizontal line. After you enter the total, below the total you are going to draw double line which denotes total. Okay. Against this you are going to find out the balancing figure, that means the closing balance of the capital account of the current year. Okay, so for that you are going to differentiate it. You are going to subtract the total from 5,000, you will get 92,000. 57,000 minus 1,000, you will get 56,000. There is no amount, so the 30,000 rupees are going to enter on debits column. So against this you are going to write to balance carried out. Carried out means closing balance. This is the closing balance of the capital account for current accounting period. Okay, so the closing balance of the capital account we consider as the current accounting period's capital account. Immediately you have brought it down to the opposite side and below the total you are going to enter the same value 92,000 and 56,000 and 30,000. Against this you are going to write by balance brought down. By balance brought down means that is opening balance of the capital account for the next accounting period. Got it? So we prepared capital account. The third account we are going to prepare from the journal entry into the ledger, that is called cash at bank account. What are the accounts related to bank account in the journal entry? You are going to enter into the cash at bank account. Okay. So the opening balance of the cash account always appears on debit side. This is the format. Okay. So the opening balance of the cash at bank is given in the question. Cash at bank 30,000 rupees given in the asset side of the question. So to balance brought on 30,000 rupees entered from the question. Okay, it is always appears on debit side. Opening balance of the cash account appears on debit side we entered. Okay, so what are the bank related transactions we have in the journal entry? We are going to enter into the ledger account, cash at bank column. The first account we have the bank account. Where is it? It is on debtor side. So you go to debtor side of the cash at bank, you are going to enter the opposite account, that is there is capital account 30,000 rupees. To there is capital account 30,000 rupees entered. Where is the bank account? Here the fifth transaction we have the bank account. It is on debtor side. So you go to debtor side of the cash at bank, you are going to write the opposite account. To Meena's capital account 5,000 rupees, to Pearl's capital account 1,000 rupees. We entered Meena's capital account 5,000, to Pearl's capital account 1,000 rupees entered. Then where is the capital account? Search here. Sixth transaction we have the capital account. It is on credit side. So you go to credit bank account. It is on credit side. So you go to credit side of the cash at bank and write the opposite account, that is by Meena's capital account 5,000 rupees, by Pearl's capital account 1,000 rupees. We enter from journal to ledger. Okay. So bank related transactions we are enter from journal to ledger, cash at bank account. Okay. Now we are going to find out the closing balance of the cash at bank. How can you find out the closing balance of the cash at bank? You need to calculate the total, then only you can get the closing balance of the cash account. So which side we have the higher value, that side we consider as the total. In this way, debit side we have the higher value. 30,000 plus 30,000 plus 5,000 plus 1,000, you will get 66,000 on debit side. The same total you are going to enter into the same horizontal line, 66,000. After you enter the total, below the total you are going to draw the double line that is denoted as total. Okay. Now we are going to find out the closing balance, which means you are going to subtract the lesser value from total, you will get the balancing figure. That balancing figure is called closing balance of the cash at bank. Okay. So we have 5,000 plus 1. We need to sum up the lesser value side. 5,000 plus 1, 6,000 rupees. So we are going to subtract the 6,000 from 66,000. You will get 60,000 rupees. Against that 60,000 rupees, you are going to write by balance carry down. Brought down. Yes, carry down, right. By balance carry down. By balance carry down means what? Closing balance of the capital account. Okay. So the closing balance of the capital account 60,000 rupees for current accounting period. We prepared it. No, next accounting period. Listen, the current account, opening balance of the capital account, cash at bank account, they given in the question. So now we prepared closing balance of the cash account for cash at bank account for next accounting period 60,000 rupees. We prepared. Now we are going to prepare the new balance sheet. Okay. New balance sheet as on 1st April 2018. We go with as per the question. Okay. So there are two sides, asset side and liability side. Liability side and asset side. Liability side, the first item of the liability side is capital accounts. Who are the partners contributed their capitals? Veena, Pearl and Terry. We taken that capital value from the closing opening balance of the capital account. Okay. So 92,000 for Veena, 56,000 for Pearl and 30,000 for Terry. The total capital amount is 1,78,000 rupees. Then we have taken what are the accounts related to liability side. We are going to enter here. Workman compensation fund, we have 1,000 rupees. Okay, we have to enter here. Then sundry creditors 10,000 rupees we taken from question and enter into new balance sheet. Sundry creditors 10,000 rupees we enter on liability side. Then go to asset side. As per the question, we are going to enter here. Buildings value 60,000 rupees. Machinery 30,000 rupees entered. Debtors 20,000 rupees entered. Investment 11,000 rupees we taken from the adjustment entered, and the stock value 10,000 rupees entered from the question. Decreases stock value 2,000 rupees subtracted from 10,000, you will get 8,000 rupees. Cash at bank value we taken from the closing balance of the cash at bank, 60,000 rupees taken from ledger and enter here 60,000 rupees. What are the transactions related to assets and liabilities account? We enter here. Okay, new balance sheet. Now we are going to find out the total. Which side we have the higher? First we are going to calculate liability side total. Okay, so we have to sum up the liabilities value. 1,78,000 plus 1,000 rupees, 10,000 plus 10,000, you will get 1,89,000 rupees. and we have to sum up the asset side total values. Okay, 60,000 plus 30,000 plus 11,000 plus 20,000 plus 8,000 plus 60,000, you will get 1,89,000 rupees. Okay, we got the same value 1,89,000 rupees on asset and liability side. Listen here carefully. The 27th sum is very easy and simple sum. You first prepare your mind in simple way. First you are going to pass the journal entry. From the journal entry, we are going to prepare only 3 accounts as a ledger account, that is revaluation account, capital account and cash at bank account. Okay, taken from the journal. And finally, you easily prepare the new balance sheet as on 1st April 2018. Okay, do you have any doubt? Please comment it in the comment box. Thank you. Take care.